Hey everybody, this is Jim at SP500chart.com. It is April 18th, 2013, about 4:20 in the afternoon Eastern Daylight Savings Time. We're going to use some time-honored techniques to take a look at these funky markets. And really nothing strange happened today. This was certainly within the game plan, and we'll talk more about it and see just how closely the market may match up with a prognostication that I've been talking about for the past week or two. Before we get there, I want to remind you that the website and the video are for educational purposes only, and nothing stated at the site or in the video is intended to be used as investment advice. I can draw lines on charts, but you have to draw your own conclusions from your own research and make investment decisions that are suitable for your personal financial situation. I am not a licensed financial professional. I'm just a guy who draws lines on charts. Okay, let's start out on a 2-day chart. And the reason I want to do this is because it shows our entire little resistance line that has pretty much kept the market intact, pretty much keeping the S&P underneath it, except for a few instances where it topped out in early to mid 2011, and we can all see that after that exuberant buying kicked in, that there was quite the reversal up here, coming down from, hold on, let me get my little tool, from a high in the top of this pattern at 1366 to a low of 1086, about 1080. So we're talking about a 280 point swing. The one time the S&P got over this line, and you can see that it got over it, came down underneath it, got over it again, kind of played with it, and formed this very well-developed head and shoulders pattern. Now here's the key. The key is, as we look at this pattern, we see an initial rally coming down to support. Then we see another rally that goes up above this line. We come down, bounce momentarily on this support trend line. It breaks. Then the right shoulder is actually a back test on this broken trend line. Okay? Keep that in mind. It's also kind of interesting to note that the first bounce was almost immediate in the formation of the head, almost a hairpin turn. In other words, we came up, sold off, immediately, boom, bounced back up, sold back. This time took a little, it was like an 18-wheeler. This was like a Mini Cooper back here. This one took a little bit more time to turn before it could come back for that back test. Let's look at a 1-day chart. We're going to look at this head and shoulders top. Again, coming off a bottom, come up, come down to a low, hairpin turn, three little dippy-doos at the top. Let me redraw this line to where it really, that's a good spot right there. Three little dippy-doos at the top. That's not a technical analysis term. Don't use that at cocktail parties. Well, if you do, don't tell them where you heard it. And then what happens? We come down, again, taking a little bit more time to sort it out, then coming back for a back test. Okay? Then another top right here. We are, as of the close today, two things have taken place. The first thing is, we are definitely now at a technically significant distance from this rising trend line. So I'm now comfortable saying this line has broken. And the other thing that's happened is, even though we dipped underneath it momentarily, we closed above that 1540 line. So could we see the same thing happening here? Again, we came up, made a right shoulder, actually two right shoulders, and then an immediate turn up, just like we saw before. Then we come down. Could we now see a little bit of working things out over a little period of time, putting together, pardon me, but if this is a head and shoulders pattern, I don't want to offend anybody, because there's still trading to be done on the right side of this shoulder. But let's be honest. People who buy after a broken trend tend to be the people who don't look that closely at the chart. And if they do look closely, they tend to not get out for that 2% gain that they might get. So I guess what I'm saying is the right shoulder is usually formed as you bring in the weaker hands, as it were. So anyway, there you go. We are right at that 1540 level. We kind of were expecting to be here. Now this chart, I apologize for all the mess, but the fact of the matter is there's just a lot of stuff that goes on. And by the way, it's been a long time since anybody has complained about my housekeeping. So let's go ahead and tidy this up just a bit. Before I get rid of these two little blue lines right here, let's look at them on a 5-minute chart. Lo and behold, this did play out as a bear flag. Okay? So when we broke down and pulled back this morning, that should have been sufficient to let us know that this is going to be a down day. Let's get rid of that bear flag because it's done its thing. Now, we may be looking at a setup here for a bounce. And the reason I say that is if we draw a line over our last 3 or 4 tops and also over our last number of bottoms, we see that this is a descending wedge, which could very well produce the beginnings of the formation of that right shoulder. Again, I'm looking for that because we've seen it every time. I'm also looking for that because the last 2 times the S&P got up into around the mid 1500s to the 1600 range, we saw a head and shoulders top. We saw it in 2000. We saw it in 2007. Maybe it's just me being overly or simplistic in my thinking that if we're topping here again, it's probably going to look very similar to what we've seen in the past. So right now, I am looking for more of a bounce. Maybe some days of indecision here, but an eventual retest of this broken yellow line. And I got to keep moving this around a little bit. There we go. So that would give us room, really, if we look at the grand scheme of things. Let's look at it on a 1-hour chart. Got to move this guy again. That would give us room to wiggle around a bit and come up for a right shoulder back test of this line. And if we do get that, be on the lookout for the S&P to turn back down and then come back and test this 1540 area again, at which point I would certainly be on the lookout for it to break. The other thing I want to show you is if we go back out on a daily chart, and again, if we look at this little black line that has defined most of our tops except for what took place in 2011, if we zoom in, now that we see that that's drawn in a good place, if we zoom in really tight, you can see we rest right on that line. Traded underneath it just a little bit. This line really cannot be expected to offer much in the way of support. Okay, it eventually will probably get broken. I was trying to think of kind of a little funny way of saying that. It'll get broken like a 13-year-old boy's heart. It didn't work. So anyway, there you have it, folks. That is the video for April 18th. If you're looking for the short term, if this line breaks right here, that's a sign that we're ready to wander around a bit and in all likelihood turn back up and retest that broken yellow trend line. Finally, just thought I'd let you know, I have moved a couple things. I added this line down here, so this now becomes a little bit broader potential channel. Okay, so if we get over this, then that would probably send the markets into some sideways action, and then getting over this orange line right here would really kick in the formation of any potential right shoulder that we might see form. So there you have it, guys. Wow, so far it's playing out. So let's just see what we got going forward. And by the way, if you are inclined to short, you should and you want to start positions, a good place to do it would be on any back test of this broken trend line. That would be a good spot. So guys, thanks for watching. Thank you for subscribing. Take care.